Does swing structure really matter? You might be thinking, why the hell would I be asking that question when, I've spent all of this time trying to preach how much market structure is king, swing structure is the most important, it's the most powerful type of structure, it's the first thing I look at, it's the first and last thing I'm always thinking about, it's the thing that gives me my entire guide and framework to find my way through the market. Why are you now pondering the question of, is it even important? Does it even matter? It's kind of a bit of a trick question in a way. Yes, it does matter, of course. I guess the point I'm trying to make in this video, which will become clear as we go through it, is that it doesn't matter exactly how you map it. Specifically, what I mean by that is whether you are someone who focuses on those much larger swings, or if you like to map your swing structure a little bit tighter. An easier way to explain that would be, let's say there's two traders and they both use fixed pip rules to measure their swing pullbacks. Someone might use 100 pips and another person might use 200 pips, right? They might like to focus on bigger swings and someone might like to be a little bit less aggressive. Now, let's say you have those two traders. Does that mean that one is going to have a lot better results than the other? No, not at all, right? Because, well, if you're a photon trader and you now have a very, very deep, and I would say elite understanding of structure, because you understand the three types of structure, swing, fractal, and internal. You understand the relationship that they'll have between each other and what they all signal. And then when you overlay that with multi-time frame analysis to really give you that, multi-dimension to your analysis and your charts, it honestly, at that point, doesn't matter how you map your swing structure in terms of size, right? If you're someone who maps a little bit tighter or a little bit looser. Okay, so I know some people can get, not panicked, but can get a little bit, maybe panic, towards panic. Like they get very frustrated. They're like, oh, my swing structure is not mapped quite the same way as yours. This person has a bit tighter. Am I on the wrong side of the market? I'm going to try and quickly and simply show you now in this video, in this lesson, that it really doesn't make a big difference. So what we're going to do is we're going to quickly talk through this first example from the aspect of someone who is a little bit more conservative with their mapping. And then we'll talk through how it would go if someone was a bit more aggressive, and then I'll show you they'll still arrive to the exact same conclusions. They can still trade it the exact same way, okay? Cool, so daily chart. We obviously have a clear bearish trend, breaker structure to the downside, so this becomes our swing high, and we have our swing low. So after a daily breaker structure, what are we expecting? We're expecting a daily pullback. So let's just jump down to the 4-hour chart and see if, just delete something so drawing, see if we can start to see structure shifting. So what I'm going to do is I'm going to do it from the perspective of someone who is a little bit more conservative with their mapping, right? Like I said, so we can see here we've already got our old 4-hour swing structure mapped on. This is someone who looks at the bigger swings, right? So we were bullish there, and then it eventually ended up switching bearish. So it's pretty much the exact same structure as the daily chart in this instance, okay? So this is our daily high. It's also going to be our 4-hour high in this instance. And we don't know where our 4-hour low is, right, until we start to get that much deeper pullback, okay? So let's start to see what happens. So price starts to pull back. Okay, that's a pretty sizable pullback. So now I'm going to map on my 4-hour swing low, right? So put this down here. So now what we're expecting price to start that pullback phase. We can see that we've had a bullish 4-hour internal breaker structure. You're probably already familiar with this example, as we used it in the previous lessons, okay? So now what we're expecting from an internal structure perspective is that the internal structure will stay bullish, right, to facilitate that swing pullback, okay? And then we expect it to shift bearish when that swing pullback is finished, and then we can look to target the swing low, right? So if we just play this forward a little bit, because you guys should be familiar with this example, okay? And then we get another bullish IBOS here, right, giving us another breaker structure, so on and so forth. So during all this time, I'm not going to go into super depth because you guys should be familiar with this, right? But we can look to trade these high lows, try and capture these high lows to try and target a high. But again, we understand that the internal structure only shifted bullish, right, to facilitate that larger 4-hour and daily pullback. Okay, so we know at any point that internal structure could shift bullish. So if you are looking to get long and we're buying, on your trade plan, what will that say? That would essentially say you are trading against the 4-hour swing trend because the 4-hour swing is bearish, but you are trading pro 4-hour internal trend, right? And you understand, especially if we look at the daily, that as we start to pull back up towards the premium of that swing leg, so just going to draw it on. All right. Let's use a slightly different template. We've disappeared, which is fantastic. But yeah, as we pull back up towards the premium of this is actually the swing range there, right? And then we come up into the previous swing range, and there'll be other confluences that you guys will learn as we go through, but there's a nice supply zone, right? There's things we can look for where we can anticipate that there's an increased probability that the swing pullback will be over. Then when we're on a lower time frame, that's when we can start to manage our expectations, right? As we come up into the EQ, that's the 4 hour, in this case, the 4 hour internal structure is going to switch bearish or may switch bearish, right? And that pullback is over, so on and so forth. Now, without me going through bar replay again, because obviously you guys should be pretty familiar with this example, I'm going to map it from the perspective of someone who maps their structure a lot tighter, okay? So they might see this pullback back over here, right, at this point in time, go, that's a swing pullback, that's therefore a bearish swing break of structure. So then when we break this high here, actually now the 4 hour chart has switched bullish. So they would not call this an IBOS, but they would simply refer to that as their boss, right, their swing boss. So now the swing trend for them on the 4 hour chart is bullish, okay? So when they're buying and they're trying to capture these high lows, they are technically trading pro 4 hour swing trend. Whereas the first trader, let's say, who was doing it more conservatively, they would be trading counter the 4 hour swing trend, but pro the 4 hour internal trend, okay? So you see on their trade plans, they both have slightly different perspectives because one's trading pro swing trend and one's trading counter swing trend, if you're looking to get long here. But they both can have the exact same read on the market, because if you're a bit more aggressive, like we're saying here now, and you view that swing structure, that's fine. And you can say, okay, I'm buying the pro 4 hour swing trend runs. But if you understand multi-time frame analysis and you should be looking at the daily chart, you can go, okay, well, the 4 hour has switched bullish, but it's probably only switched bullish to facilitate the daily pullback, right? Because we know that after the daily break of structure, when the 4 hour chart shifts bullish on a swing trend, if you've mapped it that way, then you know what phase we're in. We're now in the daily pullback phase. So you know if you're buying pro 4 hour swing trend, that swing trend isn't going to last very long, right? If the overall bearish daily trend is going to continue. So you're buying pro trend, but you're aware at any moment that trend could switch bearish. So for some of you, this might seem quite simple, but it's a really key point that don't worry about if you're a bit more aggressive with your swing mapping or a bit more conservative, because you just need to understand and manage your expectations using multi-time frame analysis of how far you think that 4 hour bullish swing trend is going to continue, right? So essentially, you're viewing it the exact same way as the first trader, but you're just calling it a boss instead of an IBOS. It doesn't really matter. It's just a structure break, right? But you're just managing your expectations again, that you don't think it's going to go that far. And even if you, let's say, I always kind of talk about this with the current members, right? That let's say, imagine TradingView had a glitch and you were stuck on the 4 hour chart for the rest of your trading career and you could never change the time frame. Is that going to make a massive difference? Well, no, because all you need to do is just zoom out a little bit more, okay? So you could go, okay, 4 hour swing trend for me has shifted bullish here. I can't take a look at the daily chart because I'm stuck on the 4 hour chart. But if you zoom out, right, you can see what the daily structure looks like, okay? Now, you might have viewed it as one big daily leg. Potentially you might go, okay, that might be a bit of a daily pullback if you're a bit more aggressive with the daily, but that's then switch bearish anyway. So either way, that's going to be your daily range. And then you know, okay, I'm bullish here on the 4 hour chart, but it's probably just to facilitate the pullback of what? The pullback of this larger leg here. So you know that as you come up towards roughly the EQ of this larger leg, even though you're not looking at the daily chart, and the 4 hour chart here is bullish here for you, you know that it's probably going to start to switch bearish as it comes up to this leg, right? It's all just about understanding ranges, right? This is one range of price action. Then you initially have this little range, then it shifts bullish. So then you have this range here. And you know that we're still trading within this larger range, right? So you know that it's likely we're only just pulling back, right, of this larger range. And as we get up towards the EQ of it, towards the value of this larger range, okay, these smaller ranges are probably going to shift bearish now. And then we expect those ranges to stay bearish until it takes out the low. And then we repeat the same cycle again. We're in this larger range, okay? We wait for the smaller ranges to shift bullish. Okay, now you can trade, pro smaller structure trend, let's say. But as we get up to the EQ of that larger range, what do we then expect? We then expect these smaller ranges to shift bearish, and then we expect those smaller ranges to hold until it takes out the low of the larger range. And then again, we're in the bigger range again, so on and so forth, right? So, I don't know. I hope I've explained this well enough where the pennies kind of dropped us. It doesn't massively matter how you map your swing structure in terms of what you deem to be significant enough of a swing pullback or not, particularly when you understand multi-time frame analysis, and especially when you can combine that with the 3 types of structure, okay? Because you understand how to read all of the internal stuff in between if you're a bit more conservative, okay? Hopefully that makes sense. And hopefully it will help you to relax a little bit if you're worried about using discretion with swing pullbacks, or if you think your pip rules aren't accurate enough. If you understand the 3 types of structure and if you understand more time frame analysis, you will always be fine far more often than not.